All right, what up, everybody? This is Jeremy with Escape Velocity Trading coming at you for another market bias update report for Sunday, March 30th. Market's been open in the futures for a couple hours now, and before we dive into charts, reviewing last week's trading, ended up having five futures trades, one loss, four wins, ended up netting a little over $8,000 for the week with futures trading. Additionally, had four options and stock trades with another $1,305 gain, leading to a total gain for the week of $9,391 with nine total trades, seven wins, and two losses. So, with that, let's dive into the charts and see what's going on. The story this week is going to be chaos. Trump's quote unquote Liberation Day is coming on Wednesday. And that is when an entirely new set of tariffs is set to hit the markets. And that's going to be for US allies and those that are not allies. So basically, just across the board, he is firing guns left and right at all sorts of different countries, regardless of whether or not we've had good relationships with them in the past. This is very likely going to continue to lead to very chaotic movements in the market. Right now, looking at the S&P 500 on the daily chart, we had a really significant sell-off, bounced back up into that 200 period moving average that I've been talking about for the last couple of weeks. We then sold off once again. The story here is really on the weekly chart. If we toss this out to a weekly chart, last week, Friday, we ended up closing below the all-important 50 period moving average on that weekly time frame. And we also had that confirm this really, really important support zone from previous price history as new resistance. So not a great look. Overall, you have to assume right now that lower prices are coming. So that is going to be the direction that I am trading basically throughout every single one of the charts that we are going to look at today. I am probably going to be looking at a bearish stance on pretty much everything across the board. So going back to the S&P daily, right now our MACD is starting to roll over again. Our RSI has reset a little bit, so it has room to fall once more, but is still firmly in bearish territory. If we go out to the Nasdaq, rinse and repeat the exact same thing. Not going to spend a lot of time here. Increasing volume on the down day, pushing back down into a new support zone here. Again, going out to the weekly chart, closing below that 50 period moving average, and it looks like look out below. Going out to IWM, again, rinse and repeat the exact same thing. Dow Jones, exact same thing. Every single one of these major indexes below are all important moving averages with room to fall on the RSI and the MACD rolling over in bearish territory. Going out to IBIT. IBIT bounced on the 200 period moving average, briefly reclaimed its 9 and 20 SMAs, and then rolled over and failed. Easy retest back down here to the 200 period moving average, if not below, depending on the market volatility this week. Going out to Ethereum, we had been kind of basing here for a while, didn't really get the same bounce that Bitcoin did, but again, pressing into these lows and looking for a rollover to the downside. Going out to XLB, exact same thing. Did get the volume bump here, but it still was less than average, so a little less confirmation on our materials sector, but still overall not a great look and has room to fall. Going out to consumer discretionary, looks basically exactly like the S&P to me. Came up to the 200 period moving average, rolled over, room to fall on the RSI, and the MACD rolling over. Going out to XLK, this area of the market is actually leading the charge to the downside. You can see here that price fell well short of the 200 period moving average, and the 50 period moving average on the daily chart is actually crossing below the 200. That is a bearish cross that a lot of long-term technicians are going to be watching, and that is not a great look. So lower prices to come on the technology sector as well. Going out to XLE, this is the one area of the market that seems to be hanging out and doing okay. As long as we stay above this level at around $91.75, we should be okay. But I am not expecting any area of the market to move higher this week. I am expecting selling basically to command every single sector this week, at least that we've looked at so far. So I am not playing anything bullish, even if the charts this week show potential bullish setups. If we go out to XLU, we are grinding on this 200 period moving average, trapped in a range between our decreasing resistance zone here and our 200 period moving average here on the daily chart. And I do not like the look of it for either direction. Going out to consumer staples, this one has reclaimed its 200 period moving average. The cross in the MACD was actually towards the bullish side, although we are still below the zero line there, so in bearish territory, but getting a potential signal that the bulls might come in to try to play. Again, this makes sense for consumer staples because this is the area of the market people need to spend money on anyways, regardless of how bad the economy gets or what tariffs end up happening. Going out to XLC, big candle to the drop there on Friday, pushing down. We haven't tested the 200 period moving average here yet, but I am assuming that we will this week. So I am watching for prices to come down to at least $93 on XLC. If we drop this one out to a weekly chart, you can see we have not crossed below the 50 period moving average yet, but our shorter term moving averages for the 9 EMA and the 20 SMA in green and blue here respectively have now officially crossed over, and we tried to reclaim those levels and couldn't last week. So to me, this looks like coming down to at least 93 on the daily or more like 91 or 92 on the weekly chart. Going out to XLI, breaking down all over the place, rinse and repeat the exact same thing. Not going to go into too much detail here either. Below the 200, below the 50, below the 9, below the 20 on the daily. And if we toss this out to a weekly chart, below everything except for the 200 and a large gap here to play the downside before we get to support on that 200 period moving average. So again, playing the downside. Going out to XLF, XLF has not been testing the 50 period moving average on the weekly chart, but similar to one or two of the charts that we have seen before, I think specifically XLC it was. We have some room to fall here to get down to that weekly 50. If we go out to the daily chart, we did test the daily 50 and are rolling over. This looks like a really easy play down to 47. Going out to XLV for healthcare, obviously rolling over here as well, below all of our daily moving averages, tossing it out to a weekly chart. We do have the 20 period moving average here, and healthcare is one of the more defensive sectors of the market because, again, similar to our consumer staples, people are going to spend what they need to spend on healthcare when they need to spend it. So it's not going to be impacted as much, but I do think that we are entering into basically a sell everything environment now. Going out to gold. Gold is the one exception to that when it is a sell everything market in terms of overall economic uncertainty. Precious metals is a hedge against that, so it performs opposite to that a lot of the time. Gold has been on a tear, had a little bit of a consolidation here for 5 or 6 days, and then broke out at the end of last week and is continuing higher. Going out to silver, silver pushing up into this 31 or 32 dollar zone. This is not all-time high on silver like we are on gold, but I am expecting a little bit of catch-up here in silver to probably outperform along with gold against basically everything else in the market this week. Going out to the dollar hit the 200 period moving average here and is rolling over just like everything else. But unlike everything else, it is actually registering as oversold now. So how much it still has left in the tank to fall is a question that needs to be answered. I am expecting at least coming back down and testing this support zone around 103.15, if not a breakdown lower, but we might have a slower move down on the dollar than the rest of the market just simply because it is overextended. Now let's go out and check out our heat map. This is FinViz heat map showing 1 week performance and where money is rotating out and into in different areas of the market. Obviously, tech just still getting absolutely massacred and kind of a mixed picture everywhere else money is moving into and out of different companies within different areas of the market, but tech leading the downfall. Also, sneakily, a lot of red over here in finances. So, keeping an eye on both of those. But I am honestly continuing to play the playbook of trying to short any high flying tech stocks that had been doing really well over the last couple of years that I think still have movement to the downside or room to the downside. Last but not least, let's go out and look at our Forex factory. This is looking at the economic data slated to come out this week, the week for the 30th. And you can see we have a ton of information. What is not listed here is also on Wednesday, the 2nd. That again is Trump's quote unquote Liberation Day, where a ton more tariffs across the board on a lot of different countries are stated to go into effect. If that does occur, it is going to turn this market from bad to worse. So, as always, guys, trade safe. Let me know if you have any questions. Hit me up in the comments, and I will catch you next week.